What's going on, everybody? TG here, back with another video. Pretty wild day in the market overall for some and very still and flat for others. Dow going up another 1.46%, S&P up about 0.6, and the Nasdaq basically flat on the day. VIX falling some more. We did have some big news. The House passed the new stimulus, so the stimulus will be confirmed once Biden signs it in, which there's about a 95 to 99% chance that he will do that, considering the fact that both the Senate and the House of Representatives, both Democratic, have already signed the bill and passed it. So it'll be on Biden's desk, and he will sign it into play. And then that'll be a lot more liquidity into the market. We talked about this in a couple videos ago. More liquidity is a double-edged sword for the market because while you do have more money pouring into the economy in the market, you also have inflation. And with inflation becomes dilution of, what's out there. The circulating supply gets diluted. Therefore, earnings mean a little bit of less. Cash on hand means a little bit less. So some of these issues can be difficult and not all positive. But I think overall, the positives outweigh the negatives. And I think it will be pretty good for the market. And that's why we did see a bit of a rally yesterday. And we are seeing basically a flat day today, except for the Dow stocks up, just hitting new all-time highs today. Tons of volatility, though, in GameStop. This stock started the day off and then was already up about 30-something% at the highs. And then all of a sudden, it just cratered 45%. And then ended up recovering from the bottoms to where it is now, about another 40%. So people playing the dips and the, buying the dip or selling it at the top, made an absolute fortune today. There was just so much volatility in this stock. The stock was halted multiple times today. And it's just becoming, like I said, an absolute roller coaster in this market. I don't know what the heck is going to happen with this company or with this stock per se. It's not even attached to the company anymore. So we'll have to see what happens. I mean, the stock's in at $266 a share. Absolutely incredible. One of the things that kind of stood out to me is Apple today. Apple was down about 1% today, down under 120 again. With the Nasdaq was up for most of the day, and yet it was still down. So I'm wondering why that it's just been showing not much strength at all recently, except for yesterday. Obviously had a big day, but overall all the things are still pretty red, except for the 6 month. It has recovered pretty well since then. But I think if you want to put your money into something right now, I'd say tech is the best. And the reason I think about this is it has been hit hard. From where it was, it's still down about over 7.5% from highs. But if I recommend putting it into more individual stocks rather than the entire index of the Nasdaq, because it's a pretty big. If you are big into indexes, I prefer QQQ. I like QQQ much better. But at the same time, I would prefer individual stocks. You know me, I like Apple, Nvidia, AMD as well. AMD is becoming a bit of a bargain right now at $77. Anything under 80, I think, is a pretty good deal. But I mean, we saw this thing was in the 73s and obviously recovered about 5% since then. But, like I said in a couple videos ago, these chip makers are going to be huge. And the reason I think they're going to be huge is because gaming and crypto is just getting bigger and bigger and bigger. And AMD and Nvidia are the two biggest when it comes to that, especially Nvidia. You guys know me. I love Nvidia. I have some positions on Nvidia. I wonder if it'll show up my account. My account's being transferred, so some things aren't really showing up today. But basically, again, flat on the day. But if we go down here and look at my Nvidias, I have a 470, 460 put credit spread. And essentially, I'm saying that AMD will be above 470 by next year. If I'm right, I'll get paid $1,700. So a pretty safe bet overall, considering the fact that stock's at 498. I did write this when it was like 430. So obviously not too good on that. But as you guys know me, I'm betting long-term on a lot of these companies. So I definitely think it will be good. Big swings in the account today, but those are just the spreads. And that's just the way those spreads work, unfortunately. So anyways, guys, I think that is what you're going to want to be doing, is putting your money into tech. Find good tech stocks that you like and tech stocks that are valued reasonably. I mean, when we talk about stocks like AMD, and even AMDs are kind of on the higher end of a 37 PE ratio. But for a company that has a lot of growth potential, I think a 37 PE ratio is super, super low. I mean, you have some stocks like Tesla that are sitting at over 1,000 PE ratio. Look at that, 1,050 PE ratio. It's absolutely crazy. There's not much room left to grow when you already have 1,000 PE ratio. You're already forward looking so much that it's kind of hard to grow even more. But those are some of the companies you want to look at, just like low PE ratio stocks. Another really, really good one that I like is Facebook. Facebook stock, 26.25 PE ratio. That is incredibly low. And also, like, again, these are growth stocks as well. Growth stocks with PE ratios that low are things you want to get in. So I know I've been preaching tech for a while, but I'm very confident on it, and I think that it's going to continue to go up in the future. A lot of people are bearish on it, and obviously a lot of people sold off their tech positions. But, I think when there's fear, that's when you want to go in. People are worried about interest rates. We had that. We had the interest rates go up. Stocks took a tumble. Now's the time you get in on them when they're still very low. Obviously, 2 days ago would have been the perfect time to get in on Monday, but you can't predict everything right. They're still down a lot from where they were. You have Facebook at a $305, 52-week high, sitting at 264. PE ratio very low of 26. You also look at earnings. Okay, is there a reason? Is it justified that it's down that much? No, they just had an absolutely incredible earnings quarter, doing $11.22 billion in net income. That's 52% year-over-year growth. So stuff like that. Profit margins up 39.97%. So you see stuff like that, and it tells you, okay, these are why you want to be in these companies. You can have some spec growth companies that have high PE ratios. Square is one of them as well. SQ, but they have a very high PE ratio as well. Sitting at 513. So it gets a little harder to, justify that. Be like, hey, this is up a lot. I don't know if we can justify a P ratio that big. It's something you want to watch out for. So watch these companies carefully. Watch fundamentals. I know right now it seems like fundamentals are completely out the window, but over time, in the short term, yeah, fundamentals don't mean much, but in the long term, fundamentals do mean a lot. And those are the companies you want to get in, and those are the companies you want to put your money into. Because, you can take a risk with GameStop. There's nothing wrong with, having a small percentage in GameStop. But, man, look, you bought here at the top today trying to catch a wave. Like, oh, it's going to go up to 400. You're already down a quarter of your money already. So you've lost 1/4 of all your money in one day on that. Now, obviously, you bought at the bottom. You're up 40%. So it's all about these spec companies. They're hard to time. And I think if you want to be safe long-term, you put your money into quality. And you can do things with that quality as well. Like I said, I do these credit spreads long-term because I get paid really good money percent-wise to put them on. With the Amazon, I'm right here on Amazon. I can make almost $27,000 just to say that Amazon's going to stay above $3,000 by next year. It's above $3,000 right now. And Amazon is down a lot from where it was. So as long as Amazon stays above that, I get all $27,000. Yeah, I could lose $28,000 of my own money if it goes down, which could be terrible. But the odds of that happening are pretty slim, considering the fact that it's already down so much. And like I said, when you look at earnings as well, what does this company consistently do? They consistently have amazing earnings to back it up. Year-over-year growth, 120%. Revenue growth, 43% year-over-year. Just an incredible earnings quarter. And, the stock plummets. That's the time you get in because those are good buys. So that's what I'm doing. I'm putting my money into quality and I'm letting it sit and I'm going to be safe about it. I could chase trends. I could chase GameStop. I could chase some of that. I'm in Amazon big. I'm in Alibaba big. I'm in Apple big. I'm in Nvidia big. PLTR I have a little bit in as a spec. CLI I have a little bit in as a spec. Facebook I have because I really like it as well. So I'm putting my money into quality and I'm holding it long term because right now there's a lot of volatility. I know the VIX is down today, but if you look at the way the VIX has been trading, these past month, just huge boom, 35%, boom, 22%. And you're seeing a big volatile swings in the market. And I think right now the best way to put your money into right now is companies that have solid earnings, solid growth. That is the time, and that is why it is a buying opportunity. When you see fear like that and you see companies that have performed well but still get beat down, those are the companies you want to put your money into. So hope you guys enjoyed this video. Hope this guys gave you a little bit of context. If you like, remember to obviously like and subscribe, and I will catch you guys in the next video. Have a wonderful day. Bye.